Hello, welcome to my channel. My name is Robyn. Today I'm going to be talking about investing. There are many reasons why young people do not get into investing. Here are just some of the ones that I could think of. I would say the main one is affordability. It's no surprise that aside from those that inherit big trust funds at the age of 18, a lot of young people do not have a lot of spare cash. This could be due to things like moving out of home, having high rents, maybe a low age-related minimum wage, maybe partying quite a lot, generally a YOLO mindset that makes you think about the now rather than the future, or maybe even treating yourself to a few takeaways a week, which adds up over the long run. Another reason why young people do not get into investing is because they have some debt and they're trying to pay that off first, as well as creating a small savings pot for emergencies before deciding to invest their money, which is a smart decision to make. Fear can be a really big reason why young people don't get into investing. It could be the fear of losing money, fear of the value of your investments going down, or even crashing altogether and losing all your money that you put into that stock or share. And the trouble with this is that the fear is a very logical fear to have, because your money can go up or down in value. If things go terribly wrong, you could lose all of the money that you've put into your stocks and shares. However, this is quite unlikely unless you're putting all of your hopes and dreams of being a millionaire on just one stock. There are ways to mitigate risk, such as diversifying your investments, but the risk is always there. And that is why it's very important to only invest in what you're comfortable losing. Another reason could be not enough knowledge of investing. A lot of people say that if you don't know much about investing, you shouldn't get into investing. And although this is partly true, I think this applies more to day traders who trade multiple trades a day in the hope of making a lot of quick wins. Once you start to educate yourself about investing, you become more aware of the many different ways you can use to mitigate your risk of your investments going down in value. Also, more recently, innovative technology has been developed on many different investment platforms to help educate people on investing and make investing as straightforward and uncomplicated as possible. I have dyslexia and I struggle with understanding things sometimes, but I've been able to easily understand how to invest on an app called Tickr, which I have talked about in a previous video. I'll leave a link for that below. Another big reason is that people around you are not investing. It can feel quite intimidating when you are the pioneer in something. It can feel really scary, and after doing a little bit of research, you might end up chickening out. In all seriousness, I do think it's actually a good idea to have at least one person around you that is actually investing their money as well. Having a friend that is also investing their money allows you to bounce ideas off of them. Ask them if you think a particular investment is a good idea. Keep each other in check to make sure you're not investing too much of your money. To learn together about investing, and also it makes investing a lot less boring and a lot more fun. A lot of young people only want to invest their money into companies that are doing good for the planet and people, and they don't realise that they can actually invest their money into companies that are helping the planet or helping people in the planet to improve the quality of life. Things like renewable energy or clean water, or even technology that is helping to improve human life. And because people don't realise that there are companies out there that you can invest your money into that are doing these good things for the planet and people, they just don't invest their money and they lose out on making returns on investments on things that are helping the planet. Another reason why young people don't get into investing is because they believe that they have to have saved up an enormous amount of money before they can invest. That is a myth. It might have been the case a few years ago, but that is certainly not the case now. You don't have to have £1,000 to invest your money. You can start from as little as £1. Yes, £1 on an app called Trading 212, or if you're more interested in an impact investment app, then you can invest from £5. So it's become a lot more affordable to actually put your money into investments. There's also people that only want to invest their money once they've established a big lump sum of money, let's say £1,000. They believe that by doing that and then investing it, they've got a better chance of getting a higher return on investment. And whilst that can be true in some cases, it's far better to start earlier, because then you benefit from compound interest. And if you don't know what that is, make sure you have a look at it, because it's been named the 8th wonder of the world. They are some of the barriers to investing that I could think of, but I'm sure there are a lot more. If there was something that I haven't mentioned about your barrier to investing, please let me know in the comments below, because I would actually love to hear what that is. Thank you for watching, sending you peace and love. Goodbye.